If you are looking at the US stock market right now, or any stock market in the world for that matter, you are probably wondering what in the hell is happening with the stock market. The market's been going down considerably. If you compare it with the March 2020 decline, the decline now has surpassed that decline, and there seems to be a pattern of a downward bear trend that we've seen week after week after week. So let's analyze this further and see what's in store for the markets in the weeks to come, and how is it going to perform in this week, in this month, and how do we make some money out of this market. So let's get into it and talk further about it. So the first thing I'm going to do is, this is the S&P 500 features that I have in front of you. I have the weekly charts, and I'm going to start off with the weekly and then dive into different dimensions to give you better perspectives of the market. So now I do have the weekly, and as you can see, let me just zoom in so you get a better picture. The weekly has touched the 200 period moving average line, and that's the blue line that you see on your screen. So what this means to a layman or any investor that's just looking to trade the weekly charts is that the market seems to have found some support at this level. Now the markets haven't opened for the day, so this is a small intraday upward momentum that you're seeing here to the 3716 level. But in terms of the weekly charts, the market has found support at the 3632 level. So that's good news. That means that the market would really have to show some bad news in terms of the fundamentals before it could take a nosedive down below. Now this is the weekly, and weekly is not the holy grail as always. There are other different charts that longer term traders look at before they would decide to step into the market too. And one of those very important charts is the monthly chart. Now this is the purple line that you see here is the 50 period moving average line. Now if this line holds true, and this is the 50 period EMA that I have on my screen, if this line holds true, there is still a few more downward trickles that we can expect from the market. Now I do not know how accurate is this 50 period moving average line, so do check your own charting charts or trading platforms that you have to decide on where is this 50 period moving average line going to be. And the reason why I say that is it seems to be differing on the S&P 500, and it seems to be more of a technical glitch, but do your own homework. Now in terms of where this seems to decline, if this is where the line is, there is a little more decline in store for the market before it could then start heading upwards. And why am I so confident that there could be some hope at this particular level, or wherever the level is? If you look back in history, you can see that the market did touch this. It doesn't always mean that the market's going to just bounce back. As soon as it touches it, they could go down. Like over here, it went down to the 2100-ish levels, 2172, before it decided to bounce back. So that could happen too, where the market may at an intra-month level touch a lower bottom. So the market go all the way here and then decide to, within the month itself, rebound and then go up higher. So that could possibly happen. So I would say play close attention to where this is in store, where this is heading towards when it touches this particular purple line, or the 50 period moving average line. So I'm going to go back to the weekly charts now and have a look at this. So if you look at the weekly, where is it heading? So it seems to be holding support here. So you should see either a small rebound or some kind of a support at this level. And why am I saying this right now? Why am I saying that there could be possible support? Now the market in general terms doesn't stretch too far from the moving average line. So for example, you can see the purple line here. The market doesn't stretch too far. So it's stretched a little bit, and now it's over here. So it may have a tendency to maybe rebound a little, let the yellow line or the purple line come closer to the price action before it decides to move in any other direction. So that's what I'm expecting that could possibly happen. Again, do your own homework, do your own analysis. This is just my educational analysis of where the markets are headed. Now, to give you a better picture of what I just said is that the markets don't move far away from the moving average lines. I want you to have a look at the daily charts, and this is the daily that I have in front of me now. As you can see, I'm just going to go back a little bit in history, and as you can see, the markets touched the bottom. Not the bottom, but it did go far away from the moving average line and then tried to go back. It tried to move away, again moved back, and then again fell down further. So if I zoom out to give you a better picture, you can see that the market's kind of like using the yellow, which is the 20 period moving average line, as some kind of a support. It's touching the 20 period, touching the 20 period. It broke through the 20, went to the 50. Now again fell down hard. But now that it's fallen down hard, it can't just like free fall like that. The markets don't do that for too long. So now that it's actually free fall, it kind of like consolidated itself a little more, and now it's kind of your. So there is going to be a possibility that it may just kind of like consolidate or come closer to just kind of like peak up a little here towards the 20 period moving average line, and then decide what it's going to happen next. But because in the higher time frames, you see that there is some good strong supports coming its way, the markets may not just kind of go down too much before it'll decide to go up. So that's just my thoughts on where the market's headed right now. I do not dive into any lower time frames. The only other time frame that I would like to talk about, just very briefly, is the 4-hour time frame. And why am I talking about the 4-hour? The reason being that there are a lot of traders, and they don't trade intraday, but not day traders, but they do like looking at the 4-hour time frames because they trade between a couple days or 3 days or 5 days, because in this period it's hard to really trade for long terms. So they probably, you can see that the market's holding its ground on the 20 period moving average line. It's again touched the 20 period moving average line and it's holding its ground. So if it breaks through this 20 period moving average line, and this is the 4-hour time frame, the markets could then rally until the purple, which is the 50 period moving average line. So that's where you would have somewhat of or upward move towards the 3816. So if you're trading between a day or two, you could possibly try to go a little bit long. But my personal advice is, if it's in a downward market, do not try to trade in the opposite direction of the market. There could be a small rally up and then it may just like lose steam. There could be some bad news comes and it'll kind of like get rid of all your gains that you have already had in that small like mini rally that you could call it. I would say like heading or trying to gain some shots in the market would be a better approach, and that's provided you're skilled in short selling, and that's a different story in how you do it. Watch a different video to understand that, but that's just my thoughts on like how you could tackle this particular market. Now, I also wanted to spend maybe a couple minutes talking about what if you are a long-term, or maybe like you want to trade a few weeks or a month. Or maybe like a week and a half. Now, if you had to trade a week and a half and you were a short seller of the S&P 500, or you shorted the S&P ETF, or the NASDAQ, you could have made. So if this was your support, okay, I'm just looking at the 4-hour right now. So don't hold me on to it. I'll probably look into a different time frame very soon, but. If this was your level of support and it broke through it, if you had a short it over here, and you would have got some good gains here from, so say 4,066. So you short in the market, you're at 4,066. You could have, the second time you could have like got some more. So if this was like, you probably had one unit, whatever the unit is, or say you could have then doubled it at this level, and this was a free fall down. As it gained momentum and went up, like you could have probably closed positions here. You see the markets going down further. This is probably where you can probably lose some of the smooth decline that you saw here. And some of the smart traders would have probably shorted this again at this point. And now this is another point, like, the markets, is it ready for another shot, or is it ready to go long? So I would stay away from this particular section. Just wait for what happens next. Does it break through or break down? And then take a decision. So if it breaks down, then it's good to, like, you could probably like short it and like end your positions until here. If it bounces back and then again rallies up, if it goes up, you can like buy it and like get it all the way to the 50 period moving average line. So that's just something that I was thinking about, is that instead of like, chopping and trying to get a little bit of gains here and there, what if you were to get the entire swing? So pros and cons in that approach, but just something to think about. Now, if I was to trade that same strategy on the daily, it appears to be a little more choppy. So this is where I would have got in. I would have like, got this entire gain up to here. Don't know how if I would have been able to time the bottom so much, but then it rallied so much back from there. So if I had a stop loss, my stop loss would have been triggered somewhere, keep a 10% stop loss, and that would have probably like prevented you from losing too much. And once it touches the yellow 20 period moving average line, I would have shot it again. So that's just another thought, just to like give you a seed into how you could strategize your trades. I found that very helpful, because there is no money to be made buying stocks right now until you find good supports and the market's starting to rally back up into positive territory. So that's when I would start investing again. So right now doesn't seem to be a good time. And like wait for some stability into the market, wait for like the Russian war to have some better news, and that'll kind of cause the market to rally, because oil would not be so much of a concern anymore, and there's a lot of good that may come out of that as well. So I hope this was helpful. Like, this is just me giving you different perspectives of like what could happen and how the market could react. So do let me know in the comments, like, which particular stock that you still have on your bucket list, you're trying to decide what to do about it, or is there another index that you'd like me to review and give my thoughts on? I'll be happy to do that. And until next time, like, do stay tuned, and happy trading to all of you.